Let's touch on bookkeeping now, and predominantly around the bank reconciliation area, because I know a lot of us really want to hand this off quickly to either VAs or to our partner or to just somebody else in a casual sense, because generally we feel like we shouldn't be doing bookkeeping because it's a waste of time, and there is some merit to that. However, what we need to do is we need to understand the bookkeeping function in depth first before we hand it off, and also understand how quick it is to do it. And then from there, you can make the call whether you offload it to somebody else or whether you actually want to keep it in-house, whether that's with you, with your partner, because of the importance of where we're reconciling our numbers and how that then affects our profit and loss, as well as our other financial reports as well. So let's have a look over. We're starting in our Xero dashboard, and what we need to do is understand why we're reconciling first. So we have our bank feeds, and that's where every transaction that happens within our bank account comes in and needs to be reconciled. It needs to be allocated to the right account, and it needs a bookkeeper, whoever wears that hat, to confirm that that is correct. So you will need to, before you look at any financial reports, you would need to make sure that you have completed all your bank reconciliation. Otherwise, your reports will be incorrect. I like to take a moment, really, pretty much when I finish payroll, and I still do my own payroll myself in the alpha tradie sense, just because it's only me and it's very simple and I don't need to offload it. If you've got, sub 5 or let's say sub 10 guys, a team of less than 10, you'll be able to rip through your bookkeeping and also your payroll, the video after this, within 15 minutes a week. So I'm going to show you how to do it super quick. But let's jump in. We're going to go to our bank account. We're going to reconcile some transactions, and we're also going to talk about why it happens and some of the nuances here as well. So it's great that at the start here we have got a couple income lines, and I want to talk to you about the differences between money received that hasn't turned green, hasn't been allocated to someone, versus money received which has been allocated and Xero automatically matches it. So here we've got Ridgeway University. Let's just assume that this is a client of ours, and we sent them an invoice. We've got the invoice reference number here. Because we've sent them an invoice through Xero, and then the client has then paid the money on the due date or whenever that is. Xero has gone, I've found the invoice. And I've also seen the transaction come in for the exact amount. Xero says, I believe these two are the same thing. And that is correct. Generally, when they go green, it means that Xero has found the equal transaction and married them together. So we can hit OK on those. Also here, we have spent a little bit of money, and what I want to do is just make sure that this is going to the right spot. So it's our property manager, and that's for rent. We're going to go OK on that. Now down to a area where we have received money, but it hasn't been automatically matched. We then need to create one. And I want to tell you the relationship here where before we had the invoice that was sent and it was matched and it was green, that amount of income would have shown on our profit and loss on the date the invoice was sent. Now, different here is that we have received $2,000 from doing a job, but potentially we haven't sent them an invoice. Maybe let's call this a deposit for our work, where we took a deposit through Stripe or a different payment host. This has not got an invoice associated with it, which means on our profit and loss, this $2,000 received hasn't shown up anywhere. So what we want to do is we want to put it under sales. We want to put it under the right client, and usually we can copy this over. You may want to title it to the right name, but for the purpose of this, let's just call it Jacaranda Maple Systems. We want to put it under sales. And now once we hit OK, that will then be recognized and shown on our profit and loss. Now there's some other components here. We can see that this City Limousines, we're just going to assume that this is an old invoice and didn't know how to code it, what we can do here is you can leave a note for either myself, or you can leave a note for your bookkeeper or your accountant, or you can generally just leave a note to get to it later. And that's where we can hit the discuss function, which will bring up the dialog box to leave a note. So we've left a note for ourselves. Your admin person could have left a note for you. This is an old invoice, didn't know how to code it. What we're going to do is we're going to code it properly. So we're going to see if City Limousines is already in. City Limousines is there. The reason we don't want to keep adding new contact is because if we have, let's use City Limousines for example, if we have 5 City Limousines, Xero is referring to those all as separate clients, whereas we want to be able to potentially in future produce a report to see how much money did we spend with that one person. And that one person would then mean that we need to make sure that it all goes to the same Who account. And let's put this under travel. Travel national sounds pretty good for City Limousines. This may have been our work party or something of the sort. Okay, and one more piece as well that we want to do here. I think this is a good moment for us to look at, let's use the example Smart Agency. What I like to do is have a little nuance here, because at some stage we're all going to do some paid ads, and at some stage we're all going to spend some money on some marketing materials. Marketing materials could be vehicle signage, could be site signage, could be temp fencing, could be, what else could we do? Business cards, anything like that, I would refer to as marketing materials, which we would put under a marketing account. Whereas if we were spending money on Facebook ads or Google ads, I would like to split that up into advertising or ad spend versus marketing. Now, an additional nuance here is this is Smart Agency. So we could assume that this could be some agency fees, which I would put under marketing so that it's not recognized in our ad spend. And the reason I would do that is because I like to know what our total ad spend is separate from all of the other expenses that went on with our marketing activity. So I like to split out our agency fees and put it over into marketing and leave our advertising for our ad spend. Now, how we do this is we actually need to leave here and go back to our chart of accounts. And we're going to quickly add these in, and I'm going to show you where we should put it. So we can see advertising is 400, the account, and there is a space between advertising and also the bank fees. So we're going to create marketing for the account number 401. So we're going to hit add account. We're going to drop 401 in there so it sits just above advertising. This is going to be a normal expense. We're going to put it under our expenses as a normal expense, an operating expense. We're going to call it marketing. And we're going to title this Agency Fees, Marketing Materials, and the like. And there's GST and expenses, correct. We're going to hit save. And then we can actually go back out to our dashboard. And then we can jump into our bank reconciliation. And then we can assign this marketing expense to the right account. So we're going to select who. I wonder if Smart is already in here. Smart Agency, fantastic. I know the number's 401. It is not 400 advertising. Advertising we're going to use for ad spend. 401 we're going to use for marketing. So that example there of breaking up our advertising versus our marketing spend is something that you could use to also do separate accounts for, say, you could break up all of motor vehicle expenses into motor vehicle registration, motor vehicle servicing and maintenance, and then motor vehicle fuel. That's a pretty normal way to set things up. But the question I pose for you there is, would we need to know that breakup? And in that example of the motor vehicles, yes, I generally would like to see the maintenance cost versus the fuel cost. I'm not so concerned about the registration cost. However, we do need to move that out in order to be able to see exactly what is the maintenance cost versus the fuel cost. Same thing for the example with the marketing versus advertising. I really do want to see how much we're spending on ads alone, and then whether that has a direct correlation to increases in revenue. And the example there would be if we saw month on month on month for 3 months in a row that ad spend was 2,000, and then we doubled ad spend to 4,000, and then we doubled ad spend to 8,000. If we saw a direct correlation of revenue increasing at an increasing rate, say doubling revenue, if revenue went from 20,000 to 40,000 to 80,000, just for whole figures, we would be able to draw a very defined correlation between our increase in ad spend versus our increase in revenue. And that's the reason why we're going to break up some of these accounts so that we can really track through our profit and loss and through our other financial reports what is actually happening, and are there some stories that the numbers are telling us? Is there some information that we can use to make better decisions for the business? So I hope that makes or sheds some light on the bookkeeping function about how important it is. And I would recommend that you start doing your bookkeeping first before you offload it to somebody else, so that you can set up your chart of accounts, you can make sure that things are going to the right spot. And say for the example of that ad spend there, once we do reconcile Facebook ads a couple times into the 400 advertising account, after a while, Xero is going to recognize a pattern. Xero is going to automatically try and create it into that account for you. So Xero is going to predict for us, and we just want to make sure we set up the right habits from the start so that our bookkeeping produces or puts the right expenses into the right accounts so that our financial reports are a lot easier to read.